Hi, my name is Melissa Savan and I'm a client manager here at Nexia Perth. One of the most common questions we get asked when a client is starting out a new business is what business structure is right for them. It's quite important to plan upfront, and it's one of the most important decisions a business owner can make. There is no one size fits all, it's a case-by-case basis. It depends on a number of factors like your personal circumstances, the type and size of your business, and other factors such as your future plans. So whether you decide to grow your business or eventually sell it. There's many different entities that you can trade out of. They can vary from something that's quite simple or more complex. The best structure for you will take into consideration your tax liability and your control over the business, your exposure to risk, as well as other things like costs involved with setting it up and the benefits, so the pros and cons that each entity gives you. So I'll run through a few of the entities that we commonly see. The first being the sole trader. So sole trader is where an individual trades in their own personal name. It's quite simple and cheap to set up. You apply for your ABN, it's disclosed in your personal return, and it's usually something that's really simple that most clients like to start off with. So in terms of the liability for a sole trader though, it's probably the most risky entity, as it does open you up and expose your personal assets to the business risk. Another entity we see quite often is a partnership. So that's where an entity or a group of people are running a business together. It's pretty inexpensive to set up. The partners are liable for their share of debts and all the partnership's debts. In terms of tax, the partners are assessed on their share of the profit and they pay the tax on there. The other entity we see quite often is a company. So that's a legal entity separate from its owners. There's limited liability for the shareholders and also for the directors, just depending on whether they fulfill their legal obligations. It's quite expensive to set up, maintain and wind up, just due to the ASIC regulations and the need to comply with these. It has a relatively low tax rate of about 27.5% and 30%, and it's the only entity that doesn't receive the 50% capital gains tax discount. The last entity that we see quite often are trusts. So that's an entity where it holds property or income on the behalf of others. The main thing with trusts is its ability to income split, so it can allocate its profits to beneficiaries. So there's a bit more flexibility on the tax rate there and utilising beneficiaries with a lower tax bracket. So as you can see, there's many different entities out there. The cheapest option may not be the best fit for you. So I definitely recommend having a chat to a Nexia advisor who could help you with your business structure and choosing what's right for you.